20% of the amount after that 10 lakhs. So basically, if you are bringing home 10,000 USD, the first option will leave you $200, and in the second option, where you have negotiated or have some preferential rate discussed with the bank, you are paying around. So if you're an engineer working in big tech, there is a good chance that a large chunk of your compensation is tied to US stocks, whether it be the restricted stock units that your employer is giving you or the ESOPs that they're giving you, right? But even outside of Google equity, right, I intentionally take a portion of my post-tax rupee salary and funnel it right back into the US market. Why? Now, the first reason would be my personal investment beliefs for the next year and the AI infrastructure that is being built all around the world. And I think the US tech companies are driving, if not 100%, at least 90% of that AI infrastructure. And the second reason is something that we don't like to talk about. It's the historical depreciation of the INR against the US dollar. Over the last decade, the Indian INR has depreciated on an average of 2 to 4% every year against the US dollar. Now, I want to be very clear. I'm not saying you to invest in the US and abandon India. I'm incredibly bullish on the Indian growth story. But this video is focused on why investing in US or whether it be some other foreign market makes sense for at least some portion of your investable assets. And then we'll deep dive into how to do it, what are the best platforms, what are the best rates, what is the best way to convert this INR to, whatever currency, and then what's the best way to bring that money back to India in the form of INR. So yeah, we'll cover all that in the video. But even from a mathematical point of view, right, if 100% of your net worth is tied to one currency and one economy, then that puts you at a lot of risk. By investing in foreign assets, you get a natural hedge against your existing Indian portfolio, right? Your portfolio grows over time as the stocks you invest in appreciate. Also, you get the silent compounded effect of the US dollar, strengthening against the INR by 3 to 4% on a year-on-year basis. It is just smart diversification, nothing else. Part 2, the 20% TCS trap. Okay, so here is where we hit the first roadblock of investing in foreign assets, right? Everybody tells you to buy Nvidia or Apple or Google or Amazon or whatnot, right? But nobody tells you about the 20% TCS rule that the Indian government has. Now, under the liberalized remittance scheme, which is the LRS, you can legally send money abroad to invest. But the rules have become stricter. If you remit more than 10 lakhs in a financial year, 20% of the amount after that 10 lakhs will be held at the source itself, which is known as the tax collected at source, TCS, by the Indian government. So basically, if you invest, let's say 5 lakhs after you have already invested 10 lakhs, 20% of that 5 lakhs will just be parked with the government the moment you convert that currency from, INR to USD or whatever currency. Now, let's be clear, that's not a fee. It's just the tax collected at source. It is not money that you have lost forever or something like that. It is essentially an advance tax that you've paid and now which you can, adjust against your final tax liability or claim as a refund when you file your income tax. It means a chunk of your investable assets is just parked with the government, earning nothing, right? When that money could have compounded over that 1 year. So, for example, if you're investing in April, right, and 20% gets deducted and gets stored with the government, and that 20% you will get when you get the refund of the income tax that you file next year, which will be in April, May, and then you'll get the refund a couple of months later. So that whole 1.5 year worth of that asset appreciating, you've lost basically because that money was just parked with the government. Okay, but here's a very easy and quick hack that a lot of people use to get past this 20% thing. Okay, so now the Indian financial year ends on 31st March. And a lot of us, file our returns in June, July, and during that time. Now, if you remit a massive chunk of money in April, the 20% collected will be parked with the government for around greater than 15 months, right? And that you will get after you file the next year's returns. Instead, what a lot of people actually do is that they do this major chunk of their investment in January, February, basically before 31st March, right? So that they, even if they are crossing that threshold of 10 lakhs and the 20% gets deducted, they're able to get that money back in a couple of months because they're able to claim that refund in just the coming ITR. You file your RTR, adjust your tax, and you get that liquidity immediately back, within a couple of months. Even before we talk about the different brokers that are available in India, we have to talk about the system architecture of how your money actually leaves India and how this process looks like. So under the RBI's liberalized remittance scheme, which is the LRS, foreign brokers are not allowed to take your rupee. Basically, they can't take your rupee, convert it to dollar, and do all that stuff for you. They can only accept the foreign currency, the USD or the pound, right? So that means the currency conversion must happen at an authorized dealer, which in most retail cases will be the bank, will be the Indian bank that you are remitting that money from, that INR from. So you can ask the Indian bank that you hold that money in, that I want to transfer this much amount INR into USD, and they will be the ones who are doing that conversion. A very important point, this means that a US broker might be saying that, oh, I am only charging 0% fees, there is no conversion or whatever, but you could actually silently be bleeding your capital, because the Indian bank who is doing your conversion from INR to USD could be charging a forex markup of 1.5, 2% or whatever, right? You need to know what exact number you're charging in order to optimize. Now to solve this, there are a lot of competitors in the market right now. A lot of brokers have done some tie-ups with certain banks that provide preferential forex rates, so that you're able to convert that currency at a very minimal rate. So we'll talk about that as well when we do a detailed breakdown broker per broker. Alright, so let's look at all the 4 major players and their mathematical truths. Alright, starting with the first, which is INDmoney. Alright, so INDmoney is incredibly popular because it has streamlined this entire banking experience, right? And it's very appealing to the youth because of a very good seamless UI, very clutter-free app. So coming to the first point, and these are going to be points that we're going to compare each bank on. So let's start with that. The first point being the forex partnership. Okay, so they use built-in partnerships that they have with certain Indian banks, and you can do the whole LRS, the remittance of the INR to USD, and that USD getting deposited into your IND account in the app itself. So it's a very seamless integration, and they usually give you a spread of around 1.2 to 1.5% forex markup fee, which is very competitive, and we'll see that what other players offer as well in the next sections. Alright, second point, very important, is the brokerage. Now INDmoney charges a flat 0.25% of your trade value. Okay, so now coming to the withdrawal fee, which is also a very important factor, and INDmoney does not charge anything as the withdrawal fee, which is a really cool feature to have. Now basically what they're saying is that they'll not charge any withdrawal fee from the platform, from the INDmoney itself. Like when you transfer that USD back to the Indian bank, that is, the INDmoney will not take any cut. But yeah, we'll come to this point of inward remittance, is basically when this conversion happens of the USD back to INR, that will again incur a charge, which we'll talk about later. But yeah, the platform itself, INDmoney, does not take any withdrawal fee. So yeah, because there is no fixed fee, per trade as the brokerage fee, I think that 0.25% scales very nicely for a lot of people, because even if you're doing very small SIP contributions, that 0.25% will be a very small number for you. So it scales very good for small to medium level investors. So yeah, so INDmoney is very cash efficient in that sense. Alright, so coming to the next platform, which is Vested Finance. Alright, so Vested is a pretty old dedicated platform for foreign investing, giving you access to around more than 10,000 foreign securities. Not just the US market, it has access to almost all publicly traded markets all over the world. Alright, so coming to the first point is the forex partnership, right? Now again, Vested Finance as well has this cool integration with, I think, SBM Bank, which is a registered bank in India. And yeah, you can convert your INR to USD or whatever currency you're looking for through that Vested Direct feature, I think is what it's called. And they give 1.2% forex markup, which is, I think, very good. I think it's very competitive as well. Alright, so now coming to the brokerage, so just like INDmoney, Vested as well charges you 0.25% per trade as the brokerage fees, but it's just for the basic plan, which is a very important point. For premium users, Vested Premium, that rate drops to 0.15%, which is a 0.1% difference, which can be a huge amount if you're a big player, right? So I think just a bit about the premium, I think it's around 4,500 or 4,000 if I remember correctly for the year, Vested Premium. So yeah, it's a call that it's a very personal call that you will have to make according to the number of trades that you do in a year. You'll have to do that calculation, right? If paying this fees is worth it for you, and yeah, because that will drop the brokerage fees. So if you're someone who is doing a lot of trades, I think it could be really beneficial for you to get vested premium. All right, so now coming to the withdrawal fee. Now again, unlike INDMoney, vested does have standard withdrawal fees for the basic plan. What they do is, I think they have a flat $5 withdrawal fee per trade. Now again, for premium users, they have 2 free withdrawals in a year. So yeah, again, you have to make that call whether it makes sense for you or not. All right, now doing an apples to apple comparison between vested basic plan and the INDMoney, I think they have the same brokerage, 0.25%, but vested does charge an extra withdrawal fee. Also, I think one point to add is that vested does have a bigger number of options to invest in. All right, so coming to the third broker and a fairly new player is INXGA, which is basically India International Exchange. So now INXGA operates out of Gift City and is backed by the Bombay Stock Exchange. Their standard brokerage is 0.25% with a minimum of $1 per trade, and they have a massive $10 withdrawal fee. But I am including them because they have certain tricks up their sleeve. Which is, I think the biggest one is the outward remittance partnerships that they've done with certain banks. So yeah, let's deep dive into that. Coming to the plans that they offer, I think they have a standard $0 basic plan as well, but they have a lot of tiered plans which can cost up to $120 per year as well, and they certainly have their benefits. The brokerage, as I mentioned, is again the same 0.25% per trade, but it has a condition. It is a minimum of $1 per trade. So even if you're doing a very small investment, right, and that 0.25% is way less than $1, you will still be charged a minimum of $1 per trade. So now coming to the upper hand that they have, which is the Forex partnerships. Now INXGA has partnered up with certain Indian banks. For example, ICICI is one example, and I've personally availed this benefit. Basically what they do is that they have an outward remittance spread of about 0.6 paisa, which gives you a Forex markup fees of around 0.7% basically, which is almost half of what the other options were offering. In fact, if you use IndusLand Bank, it's a flat fee of I think around 200 rupees and a spread of 0.5 paisa. So that is even less than the offer that they have with ICICI Bank. Now, I also want to point out that there is a caveat to this offer. Basically, they recently moved to a new interface, a new UI sort of, and post that these offers are paused as of now, because I am somebody who has availed this offer as well, and I am somebody who has remitted money while this offer is not applicable as well. So I have experienced both, and what I got to know from their customer services is that they're working on getting these offers back up, but as of now they are not. So yeah, so you need to make that call after doing a little bit of research whether it's started back up. But yeah, I'll keep you updated as well. Another point in the brokerage section, also very important, is that they have another plan that has a fixed monthly fee. Basically, I think it's $7 per month, and that gives you zero brokerage, right? So again, if you're somebody who's making a lot of trades, in a month, who's not your typical retail, invest and forget investor, then I think that could make a lot of sense for you, because paying that $7 fee, which will probably be around 500-600 rupees according to the rate. But yeah, that could make a lot of sense if you're somebody who's making a lot of trades in a month, because that will give you zero brokerage fees. Now again, as I mentioned, coming to the withdrawal fee, it's a massive $10, and I think this is applicable everywhere. You can't escape this fees. So yeah, that is one bad thing about this one. So yeah, I think coming to the verdict, if you're somebody who's doing a very small, $50-$60 SIP on a monthly basis, that sort of investment, your capital will take a really big hit. First of all, paying that minimum $1 as the brokerage fees, and then paying that $10 withdrawal fee when you actually take it out. So yeah, the place where this platform really shines is that if you're somebody who's moving a lot of money and then you're able to save that 0.6% as the outward remittance due to these preferential rates that they have tie-ups with, then that could be a game changer for you. But yeah, if you're not somebody in that bracket, then this would probably not make a lot of sense for you, and the other two options are yeah, probably better in that case. All right, now coming to the fourth and the global powerhouse is Interactive Brokers. If you ask any veteran trader, they will always tell you to use Interactive Brokers, but because it's been around for the longest time. It's very old and very reliable broker and platform. So yeah, let's deep dive into what Interactive Brokers has to offer for us Indians. Okay, so as an Indian resident, I think you pay around 0.005 USD per share with a minimum of 1 USD per order. If you're doing a very fractional small $20 investment, right, you might think that you're losing 5% of your capital to that $1 fee. But if you read the disclosures, the maximum commission is capped at 1% of the trade value. So on a $20 trade, your brokerage fees is mathematically capped at $0.2. Coming to the next point is the forex fees that it's charging for the outward remittance. So in my research for the video, I could not find any particular experiences from people or personally mine that it has some preferential partnerships with any of the Indian banks. So I think it does not have any particular partnerships, and you have to wire that money directly by the process that they mentioned. So yeah, I think when you are at their portal doing these transactions, at the end they give you a summary of everything that they're charging you. So I think it makes sense for you to first take a look, compare what different banks are offering, and then make that call, because IBKR themselves do not endorse or support any particular bank or have any partnerships with one. All right, coming to the withdrawal fee, I think this is a very good feature that they have. So IBKR has one free withdrawal every month, which is more than most people need, right? We are sort of the retail investors, the long-term investors. We barely take out our money. So yeah, so this is something I think that will be covered. Basically, you're getting 12 free withdrawals in the year and one each month. So I think this covers. Also, one point I like to mention is that on the internet, I found a lot of bad feedback on the customer service of IBKR. So yeah, that is one thing that you definitely need to keep in mind when deciding on which broker to use. Okay, now here's the most important part of this whole process. When that day finally comes, when you decide to realize your profits and sell your equity and bring that money, bring that USD or bring that foreign currency back to India and convert it to INR. So the broker's withdrawal fee is the least of your concerns, although 100% you have to optimize for that as well. But the biggest wealth, the money leak that happens is when that inward remittance at your Indian bank happens. When that USD hits your bank account and your Indian bank account, that Indian bank account has to convert that USD back to INR. Now this is where the real game happens, and this is where you have to optimize the most, because this is where you can lose the most amount of money. And this is exactly why optimizing your primary Indian salary bank account matters a lot. And I think this is something that we've covered heavily in the video that I did about choosing the right salary account for you. So definitely go check that out. So long story short, if you are using standard retail big players in India, sort of HDFC, ICICI, HSBC, or whichever bank, right? If that's a standard savings account and you have not negotiated a rate with your bank, with your relationship manager, these banks can slap you with a 1.5 or 2% forex markup. But if you have a premium salary account, and by premium what I mean is that a lot of companies, a lot of employers will have tie-ups with certain banks that will give them certain preferential rates. So you need to talk with the POCs of those banks within your company, talk to your relationship manager, and then figure out which bank is ready to give you the best inward remittance rate, and then make that call. And yeah, and just FYI, like, banks do offer as low as IBR -4, IBR -5, 6 paisa, and that is an incredible rate, and you could be losing a lot of money on the table if you are not able to negotiate a better rate. Okay, so let's quickly do the math on what that actually means. If the USD to INR conversion rate today is around 93.3, 4 paisa is just 0.04 rupees. Now calculated at a percentage, that 4 paisa is again just a 0.04% markup fees that basically the bank is charging. Now compare that 0.04% markup to the 2% markup if you don't pay attention to this whole process. So basically, if you are bringing home 10,000 USD The first option will leave you paying, I think, around $200 in the forex conversion fees, and in the second option, where you have negotiated or have some preferential rate discussed with the bank, you are paying around $4 for that 10,000 USD transaction. So I have a video already out on this exact topic, comparing different salary accounts in India and their benefits. So definitely go check it out, and that'll really help. So to briefly summarize the comparison between our four brokers, like if you're somebody who is doing, an SIP of, let's say, 20,000, 30,000 per month, and you're not moving like institutional level money, then I think the first two options, INDmoney or vested, make a lot of sense for you. The decision between these two should be dependent on, how many trades are you making, whether buying vested premium makes sense for you or not. But the moment your portfolio grows, I think you sort of have to graduate to these more institutional level brokers like IBKR or INXGA, plus the preferential rates that they're offering. So I'm just mentioning these two options because if you're someone in that category, then definitely you will end up buying some of their premium, options, and that will unlock a lot of benefit, right? Like free withdrawals or the 0% brokerage fees that INXGA is giving on the monthly $7 membership. So yeah, so all of these calculations are up to you, and yeah, I think that is the brief summary of the four brokers that we talked about. And most importantly, and I can't emphasize this enough, you have to optimize for the inward remittance rate, the conversion that happens at your Indian bank account, to optimize all of the foreign currency that you're bringing back to India. Alright, so now next question, what are we actually buying? What are the bets for 2026 personally for me? And what is sort of my investment philosophy over the year? I can share that, briefly. Now, for the average investor, buying a broad US index fund like a NASDAQ or, the S&P 500, something like that, that makes a lot of sense. But if you want to pick individual stocks, then you need a thesis to invest on. Basically, you need to believe, what you think will work in the future. So as a software engineer, obviously my thesis for 2026 is focused on a lot on, the shift from LLMs, these large language models, to agentic AI infrastructure. Like we are moving from AI that can just chat with you to AI that can solve complex tasks for you, build end-to-end functionalities, break down complex tasks into small tasks, and then able to iteratively execute on that, even take feedback from you, and we are seeing that change in the real world, like right now. And now, because of that, my portfolio is not focused on consumer tech, basically not the companies that are trying to build the next flashy app or something like that. I'm trying to focus more on the infrastructure, the companies that are trying to provide the infrastructure that these AIs need. And the funny part is that there are so less companies that are actually focusing on the infrastructure and providing the infrastructure. For example, that's why we're seeing, right, all these chip makers like Nvidia, AMD, all these booms, because they sort of have a monopoly on the market. And now all these companies that are trying to come up with data centers, Microsoft, Amazon, Google, everybody is trying to jump in the game, but it's still a pool of very less, companies, and that equate to a pool of very less equities that you can choose from to invest in the AI infrastructure. It's basically like an example of, like, during a gold rush, you don't bet on the people mining the gold, you bet on the person that is selling the shovel to mine that gold, right? So yeah, so I'm heavily, researching the semiconductor infrastructure, the companies that are manufacturing the chips, the cloud service providers that are, hosting these huge server farms, and the data center infrastructure companies. And that is where a huge chunk of the world's capital is also flowing, right, to support this AI super boom. Now, for the mandatory disclaimer, I am a software engineer, not an expert, and I'm just sharing my research and my frameworks. I am not a SEBI registered financial advisor, so please don't blindly copy my strategies. Please do your own due diligence, but definitely use this video to understand the taxes, the process, and the various brokers. Now, if you want to see more of stuff like this, I have a lot of videos on my channel talking about expenses, investments, and a lot of different financial jargons. So do check it out. Now let me know in the comments which platform are you currently using, or did I sway you in the right direction to move to a new one. And yeah, drop a like, subscribe to the channel, and yeah, see you in the next one.